Hi everyone, my name is Jose. I really appreciate the opportunity to be part of this selection process. Today we will be talking about accrual basis accounting and cash basis accounting. Both of them are two different ways that we can use to register the operations in our business. First, we have accrual basis accounting. In this type of accounting, what we want to do is to register the operations or the transactions when they happened. And this will be very independent of a money transfer. The main goal will be to register the revenue when it happens. Uh, on the other hand, we have the cash basis accounting, which is the complete opposite in terms of focus because it focuses on the money transfer. When something has been paid, and the date that it has been paid is the date that we will register that operation. To make it a little bit more clear, we will see an example where a customer has purchased something to us, and that purchase is with a payment term of 30 days of credit, and this operation is for $100. Let's imagine that a scenario. So on accrual basis accounting, what we will do to register the operation will be right now on February, we will register first the sale on our P&L with a credit because we will increase our sales. So we will credit the sales account, and then we will debit accounts receivable because that payment won't come immediately. So we will keep that in books in accounts receivable. So let's imagine that the time has passed and this customer made the payment on March. So on March, we will decrease the accounts receivable, but we will decrease it with a credit because it was an asset. We will decrease it with a credit, and we will debit our banks or cash with a debit to increase that asset. Uh, on accrual basis, that will be the end of the cycle of a purchase of a customer, and that will be all. On cash basis accounting, on the same scenario, customer purchased something on February, but they paid on March. We won't register this sale on February. We will do it on March when we receive the money. Uh, and it will be as well with the journal entry, but the journal entry will be just one, and it will be banks or cash, the payment method that the customer used, and we will credit our P&L in sales in March. In this scenario, uh, nothing happened on February, but it do on March. The difference for these two kind of scenarios is how we handle our business. And right now, if you ask me which one will be better, I will say it depends on the scenario. Let's imagine, or going with the same scenario, let's imagine I not only one customer, all my customer have payment terms, and some of them pay me 30 days after, or some of them have a credit term of 60 days of credit, 90 days of credit. In that scenario, accrual basis accounting will be a better tool to do it because I have more control of each one of the accounts. I can transfer my balances through time, and it will be better for me to understand my financial status on accrual basis. Uh, on another scenario, let's imagine I'm running a restaurant. Well, all my customers paid immediately, and also most of my suppliers are immediate payments. On that scenario, a cash basis accounting will be a much better tool because it's easier, it's quickly, and it helps me to register on a much easier way all my transactions, and I don't have the need to transfer balances through time. So it really depends on the business that we're running, and we must analyze the situation of which one of those will be better for us to use in each individual scenario. Uh, I think that wraps up the information for accrual basis and cash basis accounting. Again, I really appreciate the consideration, your time, and I will look forward to see what's next.